If you're thinking about acquiring a business, did you know that you could obtain reps and warranties insurance? This type of insurance is becoming more common in middle market M&A deals to replace escrow mechanisms, protect relationships with rollover management, and assure collection in the event of a breach. The M&A deal-focused professionals at ABD Insurance and Financial Services is a full-service brokerage and consulting firm, crafting innovative solutions to help address risk for clients of varying growth sizes, stages, and industries across the globe. For more information, you can visit their website at theabdteam.com or reach out to Matt Soma at matt.soma, S-O-M-M-A, at theabdteam.com. You can also listen into episode number 38, where Matt and I discuss this product in more detail. Hope you enjoyed today's episode.
Looking to buy, sell, or grow your business to position it for a sale? As the owner and managing partner of Sun Acquisitions, Domenic Rinaldi has personally been involved in over 300 M&A transactions. He has seen and done it all, consulting with large and small businesses across a broad range of industries. On M&A Unplugged, he'll interview buyers, sellers, and their advisors about their experiences scaling, selling, and acquiring businesses. On every episode, you will get key learnings, but most importantly, you will be better prepared for your own acquisition or sale. This is M&A Unplugged with your host, Domenic Rinaldi.
Many of my clients are asking how the COVID-19 pandemic is impacting M&A deals. While we are early stages and have not seen the full impact of the crisis on deals, there are some early signs of how the landscape is changing. Today, we are being joined by M&A attorney Trevor Crow, who operates a practice in Denver, Colorado. Trevor is a well-established attorney who focuses his practice on representing buyers and sellers of businesses on deals $50 million and under, startup companies with entity selection and formation matters, as well as equity and debt financing transactions. Trevor, welcome to M&A Unplugged.
Hey, Domenic, thanks for having me.
Yeah. So, hey, Trevor, why don't you start with just a quick backgrounder on yourself and your firm, and then let's dive into what's happening out there right now with deals on the legal side.
Sure. Yeah, that sounds great. So I graduated law school in 2009 in Denver, and I came out right in the middle of the recession. So that was a tough time to graduate law school, or anybody who was graduating from school. It was a tough time to be out there. And so, I started at a firm that I was supposed to do corporate transactional work there. I was a summer associate there and had been doing, corporate transactional work the whole time. And so that was where I thought I was going to be, and I was excited. And then the downturn hit, and I ended up being in litigation because that was all that was there. So I ended up doing more litigation, and that lasted for about a year and a half or two. I was kind of moving into doing more transactional work, but ended up moving to a different firm where I was doing solely, corporate transactions, M&A deals, and things like that. And so I bounced around to a couple firms, mid-sized firms in Denver, and made partner at one of those in January of 2017. Was partner for a year when I decided to go off on my own in February of 2018 to start my own firm in Denver to do a boutique transactional firm to focus on the corporate and M&A side. And we focus on lower middle market M&A deals, I would say. So kind of our wheelhouse is 25 million and under. And we deal with all kinds of industries, and have just been laser focused on that. And it's been great.
So imagine the market's been pretty busy for you the last couple of years, and then here we are, the pandemic hits, right?
That's right. Yeah, we were in March of this year, 2020. We started March with 4 deals going, and we were excited. We were plugging along and doing great, and then COVID hits, and all those deals, except for one, ended up going through and closing. All those deals died, and so then we were sitting there and kind of trying to figure out what we were going to do next. And we have existing clients, and we were working on lease amendments and forbearance agreements for loans and things like that. But it seemed that all the transactions died for about 2 months there for us, at least. I know some people were still getting some deals done, but most of our deals went away for about 2 months and just now starting to come back.
Got it. Yeah, we were lucky. Our M&A firm had 8 deals in diligence when we started the pandemic and closed one. 3 deals fell apart. We added a new one into diligence, and so we've got 6 in diligence right now that are, weaving their way forward slowly. People are being very cautious, but still weaving their way forward. So we'll see what happens. And the buy side of our practice has picked up tremendously, as you can imagine, and you're probably seeing as well. Tons of buyers out in the marketplace looking for assets.
Right, that's right. I am seeing that. Most of the calls that we've received are from buyers that are either putting together funds or taking other steps to kind of, I guess, capitalize on the current market and potentially have, a little zone here of a buyer's market where people want to come in and take advantage of that.
Yeah. So interested, when you and I had talked early on, you had some thoughts about how deals are going to be impacted and things that might change from a legal perspective as a result of the pandemic. And so, I'd love to hear your perspective and dive into some of those issues. So, tell us what are you seeing and what do you anticipate?
So, now we are in these uncharted territory where we've kind of post-COVID. And so there's a number of things that have kind of changed with deals now that I'm seeing. One is reps and warranties. So from a seller side and a buyer side, these agreements have reps and warranties about the business. And now we're having these new COVID reps and warranties. And so, has the seller taken all steps to ensure that people have been safe and not contracted COVID, whether it be customers, employees, anything like that? You're starting to see these sort of reps come in from a buyer side or buyers pushing for those sort of representations in the purchase and sale agreements. You're seeing the reps that they've complied with all law, which is a typical rep, but now there's being added complied with all law, including any regulations or government mandates on COVID. And so, there's a lot of things coming into these contracts that we're going to deal with on that side. So that's one big issue is dealing with these reps and warranties and how buyers and sellers are going to navigate that in the contracts moving forward and what sellers are willing to actually put in the document and rep to. The other thing is, a lot of business owners from the sell side have received PPP loans. And so now the question is, how do you handle that in the documents? And so, one choice, I guess, would be that sellers could postpone closing until they receive their loan forgiveness. But there's a problem with that because the SBA can have up to 120 days to sign off on the loan forgiveness. So that's not going to fly for purchasers or sellers to wait that full 120-day period. And so, we got to deal with how to do that, and whether there's obviously it depends on how the deal is structured, if it's going to be an asset deal or if it's going to be a sale of all the equity interests. But, is there going to be some sort of, certainly it's going to be a representation that says the loan will be forgiven, but there might be some escrow funds or some indemnity or things like that need to be put in to handle that PPP loan as well.
Yeah, so I saw some guidance yesterday that indicated that if there was a transfer of assets before forgiveness, it might trigger a default provision in your loan agreements. And I guess that is bank specific. So not every bank, obviously all the banks have different loan documents, but it might trigger a default. And obviously on a default, that means you would be on the hook for the entire amount and have to pay that back potentially. And so have you heard anything about that at all?
I have heard about that. I need to look more into that because I'm not sure the answer there. And it may be lender specific because, these lenders put out their own documents for this. There wasn't a standard form that the SBA put out. And so it could be in there. And so I guess that is an important thing to note for, sellers out there is you want to look at the actual loan documents because there's probably it's not a one size fits all there on what the answer is. But the developments on this are coming out daily. So it's, something that I need to be staying on top of and have been staying on top of. But I don't have the answer to that one.
Yeah, I don't think anybody has the actual answers yet, right? Because the law keeps changing, right? I mean, we've had two changes to the guidelines on PPP, and who knows if we're going to have more. So it's definitely some quicksand and a lot to navigate. But you're bringing up a great point, which is sellers really need to be careful, and buyers as well. If the seller took PPP money, what happens if they're looking to transfer the assets of their business or even the stock, right? And
right.
Who's on the hook? Is there going to be forgiveness? And sounds like coordination with the bank that issued the PPP loan is going to be of paramount importance to get guidance from them, and probably written guidance, right?
Right. Yeah, I think so. And I some banks are better than others on this and how on top of it they are. But yes, getting somebody on the line from the bank and then having that followed up in writing on how this is going to be treated is key, I think, in these situations. And, as you said, in a stock deal, or if there's a sale of equity here, I'm seeing that people are pushing, or buyers are pushing, for the total PPP loan amount to be held back from the purchase price until the forgiveness has been determined.
Yeah.
So I wouldn't doubt if, buyers should be aware of that, especially if it's an equity deal.
And Trevor, interested to get your opinion on this. Is in an asset transaction, would the buyer assume any potential liability for that PPP in an asset transaction?
So that's a very good question. And I think there's not a clear answer onto that. And I know that's a typical lawyer answer, but certainly in the documents, if I'm a buyer representing a buyer, I'm going to say that's not a liability that I'm taking on here. And that's totally your liability. And to the extent the bank ever were to come after me for that, then you're on the hook. Now, so there's certain rules or certain laws in different states deal with this differently, but it's more common law than statutory law. But on the transfer of all assets, if somebody's coming in and taking over the business, there's potential arguments that people can make on fraudulent transfer and things like that, where they could say, oh, yes, this buyer really is just stepping into the shoes, and so we're going to come in after them. So, for example, if the bank doesn't forgive the loan and they're coming after the seller, but seller has no more assets, so now they look to the buyer, there's a possibility that they can make that argument. I think if it's well documented in the asset purchase agreement, that you're not going to have, the buyer should not have an issue with it. Not to mention you're going to have the reps and warranties and indemnification provisions in that APA that says, buyer is the one who's going to be on the hook for that. But there's no personal guarantees on these PPP loans. And so it's a good question. If seller sells all assets, there's no assets to come after, and then bank says, hey, we're not forgiving the loan, they don't have a personal guarantee to go after. So who do they go after? And, right. I'm not sure how that's all going to play out. You can never stop somebody from, making a claim or suing you. And so seller should always be aware of that. I'm sorry, buyer should always be aware of that. But I think if it's well documented, then there shouldn't be an issue on their standpoint of being liable for it, at least.
Yeah, I think that's a great point. There's no personal guarantee. So, there's no way the bank's going to reach beyond to the individuals. But I wonder, in the bank documents, I'm assuming you are pledging assets of your business in those bank documents, right? So I wonder if there's even an issue of, can you transfer the assets without the bank's approval?
Yeah, I think that's going to be on a bank by bank basis, or looking at the actual PPP loan documents. There's some people who have received these PPP loans without even documentation, and is what I'm hearing. None of my clients, or I haven't heard that, but I haven't seen it myself, but I've heard that from people, that some of the early PPP loans came out and were deposited in accounts without any documents signed. And so I don't know how that, how people are going to clean that up, because certainly there should be some, promissory note and loan documents signed for this.
Oh, yeah.
But I think it's very individual on how these loan documents work. And that's, underscores the importance of actually pulling those out and taking a look and seeing, is there a restriction on transfer without bank consent? And if so, get that process started early.
Yeah. We started with reps and warranties, and you intimated, indemnifications. I imagine that, there's always been a heightened awareness and discussion around reps and warranties, but it's really probably going to take on a whole new meaning now moving forward. In the breadth and depth of those might be enhanced quite a bit, I would imagine.
Yes, I agree. I think this, as if that section of the purchase agreement wasn't long enough, I think we're going to be definitely adding a lot to it. And, it's just uncharted territory for everybody. Honestly, we're not sure how lawsuits may come about, because of COVID. If somebody gets sick or an employee contracts COVID, can they sue their employer? Is that going to be an issue? Is there a valid claim there? If a customer comes in, and gets sick or contracts COVID, the difficulty is proving that you contracted it from that, business itself. And how do you prove that? But
right.
Just having the lawsuit out there is definitely a problem. And so there's a lot of unknowns, and that adds to the reps and warranties, or the uncertainty from the buyer side, which usually comes in the form of more reps and warranties of the seller in that purchase agreement.
Yeah.
And so, I think this is definitely something to be in tune to. And, one of the things that I think may be a nuanced issue, but, if you have a good lawyer and broker and people on these deals that can take a look at these, the definition section of a purchase agreement is huge, because that's where you can find hidden stuff, or hidden stuff gets added. Again, I mentioned the definition of laws. And so you might say that there might be a rep that says seller has operated in material compliance with all laws as a defined term. And that laws, defined term may include things like COVID regulations and things like that. And so be aware that it may not just be the body of the document, but the definition section is big in dealing with these issues as well.
Yeah, I don't envy attorneys in this post-COVID environment. There's not enough guidance. There's not enough clarity. And boy, there's going to be a lot to sift through here. And hopefully we can get to a level playing field that everybody can operate on. Otherwise, you could see it being the wild, wild west, with lawsuits potentially after deals get closed and all sorts of issues.
Right. Yeah, no, I agree. And, one other issue, Domenic, if you don't mind, I think is to think about, you can go out and read articles and things about how to prepare your business for sale and what sort of things you need in place from a seller side to make sure that, your business is ready for sale. And, a big piece of that is obviously having your financials in order. But the other thing is, if you have employees, is having that whole situation in order, especially now, with work from home. Do you have, a work from home policy? Do you have things in place for how, employees are going to return to work? All those things, and coming off at least as more prepared on that side of it from a seller side, I think, gives a buyer a lot of, assurance that you've been operating in compliance with the rules and regulations that governments have put out for COVID, and you just come off as somebody who's on top of it, and that of a business that a buyer might be more attracted to. So, there's certain other things now, I think, from getting a business ready to sell side that is important for sellers to think about.
Well, it's certainly, we've always talked about the importance of having an employee manual or some sort of, handbook, operations manual. And so it adds value to a business. It gives people a roadmap. It gives buyers comfort when they buy a business that the business has been well documented, and you can replace players, and there's a playbook to follow. And so now you need to be thinking about, how do you add post-COVID instructions and make sure that you're following state, federal laws as it results to, as it pertains to this. So I think it's a really good point. And for M&A Unplugged listeners that are owners of businesses, you should have an operations manual. And if you do, you should open it up and add COVID related items so that everybody's got the roadmap.
Yeah, I think that's a great point.
So Trevor, what else do you see? Are there any other major issues that you see post COVID here as it relates to legal documents in an M&A transaction?
The other thing that I see, and this I guess is related to the legal documents, but I think this is more in probably your wheelhouse even, is that the valuations are such in flux. And so how do you normalize valuations now? I know different industries have been hit differently because of COVID. And so, if your industry has been hit or your business itself has been hit particularly hard by COVID, how do you come up with a valuation? How do you normalize the financials in a way to send to a potential buyer that they can get comfortable with and create a valuation off of? And so, what that's led to, I think, or will lead to, and this is something that's kind of changing by day that we're dealing with as deals are coming back online, for us at least, is how do we, purchase price adjustments? Is there going to be, purchase price adjustments because of this valuation? Or, how do you make reps on financials that, when you have COVID right now, dealing with in this COVID environment, you have certain reps on your financials. And so, but if things don't come back and the business never picks up, then there's going to be more scrutiny on what was provided in those financials. Cause that's when there's red flags raised for buyers is, oh, hey, you were doing this, you were doing X back then, or at least you told me you were doing X in 2019, and now 2020, you're doing Y, and I bought the business and it's continuing to be low. And so there might be more scrutiny coming back there from the buyer, as well as now with deals getting done now, I think there's going to be maybe some concessions on purchase price adjustments or earnouts or other ways to structure purchase price.
Yeah, I see earnouts coming back to the forefront in a big way, where there are big gaps in what a seller wants versus what a buyer is willing to pay. And if the seller really believes the business is going to come back, I think earnouts are going to be, a key way to bridge that value gap. It's either that, or if as a seller, you're going to have to hold on to your business and wait for it to recover. And who knows how long that's going to be. And the interesting thing about that, Trevor, that we're seeing is there's still a very strong appetite for deals. There's still a ton of money out there. Interest rates are incredibly low. The capital markets have remained fairly open for M&A deals. And so as a seller, you really have to weigh, do you want to, to continue to go forward? Or if you're ready to leave your business, do you leave it not quite the way you had hoped? But if you believe the business will come back, you can fix that through an earnout or a holdback or an escrow or things like that, correct?
That's right. Yeah, I think that's absolutely right. And I would predict the same thing, that there's going to be more of that coming. And yeah, I mean, I think you're absolutely right that this is not necessarily a terrible time to sell. There is money out there. Certain industries, have been hit less hard and I think become more valuable in the fact that they show that they have staying power and can survive a storm like this. And so there's, private equity money. There's a lot of, money sitting on the sidelines that is ready to come in and purchase businesses. And so if it's well run, I think, it could be a great time for sellers to sell, especially if they're not willing to wait it out for another, 5 years or so to kind of get the financials back in order.
Yeah, our experience pre-COVID was there were not enough deals on the market for the number of buyers that were out there. And the number of deals is going to decline for sure. And I don't see where the number of buyers has declined. In fact, I think we might wind up with more buyers in the marketplace chasing even fewer deals. So it could be an interesting time for sellers who've been on the fence about whether or not this is the right time to sell.
Right. Yeah, no, I think that's right.
Well, Trevor, this has been great. I think you've brought up some really key points that people need to think about in this post-COVID environment. And let's hope we continue to recover as a nation, our businesses recover, and we can, get back to some equilibrium across the board. But, in wrapping this up, are there some, last minute thoughts that you'd like to share with the M&A Unplugged community?
Yeah. So I think the main points here, just to recap a bit on what we talked about, from a seller side, I think get yourself in order from, COVID side. This is something that's not on any, or maybe it's on the new checklists that are coming out on how to prepare your business for sale, but it should be on the checklist now. What steps have we taken to handle COVID in our company? Do we have work from home policies? Do we have things in place to deal with COVID? So I think that's one key area, and that's going to help market that business for sale in the future. The next thing is, just be prepared for new reps and warranties in that purchase agreement about COVID and what steps you've taken and compliance with government regulations and things like that. And so I think that would be another thing to think about and be prepared for. And, the last thing I guess we kind of talked about is this purchase price, and how can you navigate a purchase price that's going to make a buyer comfortable to purchase a business in this environment. And that may be, through an earnout to bridge that gap. It may be through a purchase price holdback or something like that. So anyway, be thinking of that, because that also will make the business more marketable and may get you a higher price.
Awesome. Trevor, really appreciate that. If folks in the M&A Unplugged community wanted to get in touch with you, how could they best reach you?
Yeah, so my website is www.crow.legal. So that's CROW.legal, LEGAL. There's no E on Crow. It's just Crow like the bird. Or you can just email me at trevor@crow.legal. You can email me there or call me 720-230-7123. We do lower middle market M&A deals. We're based in Denver, but we do deals all across the U.S. So anybody want to just bounce ideas or have questions, happy to take your call or email and talk with you.
Awesome. Trevor, thank you so much. Really appreciate you being here.
Yeah, thanks, Dominic. This was fun.
All of today's information will be available in the show notes. If you would like to learn more about the process of acquiring or selling a business, please visit our website at sunacquisitions.com, or feel free to reach out to me at drinaldi@sunacquisitions.com. I look forward to seeing you again on the next episode of the M&A Unplugged podcast. And until then, please remember that scaling, acquiring, or selling a business takes time, preparation, and the proper knowledge.
Thank you for joining us today on M&A Unplugged. If you enjoyed the show, please subscribe, rate, and recommend it wherever you get your podcasts. If you want more great information on how to scale, acquire, or sell a business, please visit our website at sunacquisitions.com.